This is Commodity Wrap. I'm Tony St. James. Well, we wrap up a Wednesday. By the way, happy National Egg Day. You know, the National Egg Board at one time, I don't know if they still use this or not, but Brian, do you remember the incredible edible egg?
As soon as you started saying that, I remembered it, Tony. I had kind of forgotten it, but now I remember.
There you go. By the way, Brian is Brian Hoops, President, Midwest Market Solutions. He joins us here each Wednesday, and I welcome you in with a lot of red on the screen again for the row crops. I did find, let's see, canola was higher. And then other than that, how about bean oil? But really, bean oil is a pretty good place to start because that thing is on fire.
I think that's a great place to start because that's the only real positive we have to talk about. Otherwise, it's all negative here. But yeah, bean oil surging higher, hitting some contract highs this week in almost all the contracts. And you look out even to December, prices compared to where they're at here currently seem fairly cheap, just in that comparative respect. Now, maybe we have some sort of a correction or some sort of a pullback, but there's underlying support because of renewable fuels for soybean oil, and that strength in the bean oil is really the only thing I shouldn't say the only thing supporting soybeans, but it's one of the only things that's supporting the soybean market. Otherwise, we'd probably be trading lower because of good growing conditions, good weather. Other supporting factors are, strong demand base from China. It looks like China has purchased or nearly purchased the 12 million tons that they had agreed to. And those purchases are expected to increase to 25 million for next year. So that kind of gives us a little bit of a higher level of support for the soybean contracts and will keep us from falling sharply during harvest or making harvest lows. But it's the bean oil that is pushing higher and is catching a bid. But we're seeing a lot of spread trade of soybean oil versus soybean meal.
Okay. Flash sale. On Wednesday morning, you and I talked about it, the first hit on Market Day Report on RFD TV. Flash sale, South Korea, 5.35 million bushels. Talking corn again here. Good to see, but at this point, these are not things that are going to change the market trajectory, I would think, unless it says China. Is that a good way to tee that up for you?
It's almost a perfect way to look at it. Unless China starts stepping in and buying corn, these small export sales to South Korea or Mexico or whoever really doesn't mean anything. We're 95% focused on what's happening with weather and the growing conditions and how big this crop could potentially be. That's why we're seeing all this selling. Plus, the technicals are really falling out of bed here for that corn market, and that is contributing to the weakness. You look at July corn, where it settled today, we're right back to the lows that we had in January after that WASDE report. And we've given back all the gains that we had in February, March, April, May. It's all back down to these January lows. In fact, we're only 6 cents away from contract lows in that July corn contract. So certainly technically very bearish. A couple export sale announcements are not going to change that trend. We're going to see continued weakness in this market until we have some sort of a weather problem that, this is the time of year where we sometimes do a stretch of really hot, really dry weather for 1 to 2 weeks, 3 weeks, whatever, a dome of heat across the Midwest. That'll give us a rally in prices because that could curtail yields of the corn crop. And that is the bottom line of what we need to see to turn this thing around. I'm not even sure that if China starts buying corn in small quantities, would be enough to turn things around.
Well, and speaking of turning things around, Wall Street, the equities, Dow, NASDAQ, S&P, moving lower here. Again, you talk about being on a rocket. These things have gained 20%, Dow up 20% year over year. 38% gain for the NASDAQ. S&P is 27% higher. And then gains over the previous month, 4, 5, 7%. little pullback. There's nothing to worry about with a pullback in a market like this, is there?
Well, you don't worry about a pullback until it's not a pullback, and when do we decide that this pullback is something more than just a pullback? Well, we're hitting contract highs for this week in the S&Ps. In fact, we made them earlier this week. Today we're pulling back just a little bit, and we could pull back maybe into the 75-30 area before we find some real strong technical support. But we just have not had many lower days going back to the middle of May. I'm looking at some charts here now, and since May the 15th, this would be the only third lower close that we've had in that 3-week period. Everything else has been higher, and so corrections or pullbacks are 2-3 days sometimes. Today we're having one, and maybe we extend this into Thursday or Friday, but overall this trend seems to be going higher, and market is kind of sifting through the news and reacting positively to the news it wants to, and kind of ignoring some of the negative news and just shrugging it off and continuing to push higher. And that's an indication of a really strong market as well.
Well, if that's a strong market, markets that aren't strong right now, U.S. wheat market. Chicago down 4 straight sessions. Kansas City off 10 sessions in a row in the red, and Minneapolis lower for the last 6. Quick break here. We're back with more. Our guest today, Brian Hoops with Midwest Market Solutions online, MidwestMarketSolutions.com. This is Commodity Wrap. This is Commodity Wrap. I'm Tony St. James. Welcome to a Wednesday, and our guest today is Brian Hoops. Brian is president of Midwest Market Solutions. A lot of red across the row crops. I mentioned one row crop that settled higher on Wednesday, canola market. The only other market that settled higher in that ag space outside of livestock was bean oil. But bean oil and canola kind of moving in the same direction at the same time here. But we go over to the livestock markets. Cattle lower, live cattle in the red, feeder cattle in the red, but hogs managing a higher settlement. What caught your attention here?
Well, the big thing is the cattle. That's where I think you want to start looking. We had a lot of weakness early this morning. We talked about the rumor this morning that was kind of hitting a lot of the trading circles. And, we did open lower. We sold off and ran a bunch of stops. Looking at the August contract, most active contract, it traded below the lows from the month of May and to the lowest level since going back to March 27th. So we took out lows from April and May today, running all those stops below it. Then we closed back above that support area, and now what should be support. We closed back above it, so not a terrible close, but certainly the trend is turning lower here. You look at it at a chart and you see a series of lower highs and lower lows. A lot of technical measures are telling us that the trend has changed. You look at August feeder cattle, we're not that far away from the March lows, which were around $3.36. We're about $6 away there. So we're much closer to the lows than we are to the highs in this cattle market. I don't think we should be really surprised that the cattle market has turned a little bit softer in here from the standpoint. This spring, we talked about it with our clients almost every day and on TV with you and this Commodity Wrap program, that the highs will probably be made in the spring when the numbers are the tightest and the demand is the strongest as we go into the Memorial Day and Father's Day and 4th of July holidays. And now we're past Memorial Day. Father's Day is just around the corner. 4th of July will be here before we know it. A lot of that demand is going to start leaving, and that's what these August futures are anticipating, is that cash is going to start coming down as the summer matures, and the futures are already starting to trade that. So we should see anyway, some bounces in this market, and I think those really need to be looked at heavily as selling or hedging opportunities. Now, the front month cattle is still heavily discounted. August futures to the feeder cattle index, June live cattle heavily discount to the cash trade. That's going to be supportive for those front months and should lift us a little higher. But Market, I think, is telling us pretty clearly. It's anticipating cash is slowly going to start working its way lower.
Okay, and we finish things up here with the energy market. Looking across the board, really, crude higher. It's gained 52% year over year, but down 10% month over month. Over on nat gas, we were higher. And then the one that's really led the entire sector is diesel, up 85%. Final thoughts here on energies?
So if you look at the crude oil, in this week, in the 3 trading sessions that we've had, compared to last Friday's close, we're almost $9 higher than when we were from last Friday. So we've really retraced a lot of the losses that we've seen this last week. In fact, as we were speaking here, we're into some resistance and the 50% correction. The 62% comes in at about $98, just shy of 98. Those are some targets here for rallies in this crude oil market. But you can see the grain markets had followed crude oil when we were trying to plant the crop because we were really concerned about fertilizer and fuel costs. Now that the crop is seeded and fertilized, we're not quite as concerned with the grain markets. You can see it's divorcing itself from crude oil and just starting to trade its own weather fundamentals. So crude oil, I don't think will be a pull to the grain markets any longer, and probably wants to go find some of those other retracements, maybe 98, maybe up to the 101 area here maybe this week, because it doesn't look like those tensions are easing across the pond between the U.S. and Iran.
All right, Brian, we want to visit with you, find out more about Midwest Market Solutions. Where do we do it?
Well, you can go to our website, find a list of our offices, which is MidwestMarketSolutions.com. If you want to talk directly to me, 417-501-5132 is my phone number.
Brian Hoops, President, Midwest Market Solutions. This is Commodity Wrap.